I'm Priscilla Barrera with the Investing News Network, and here with me today is Andrew Miller, Head of Price Assessment at Benchmark Mineral Intelligence. Andrew, thank you so much for joining us today.
Thanks for having me.
All right, so my first question for you today, we're entering the second half of the year in 2019. Do you still see a negative sentiment in the market? Is that changing? What are you seeing?
So I think the negative sentiment really, has been driven since the start of last year by the decline in pricing. But I think, generally when you look longer term, the demand outlook actually continues to strengthen. So I wouldn't say the negative sentiment is overbearing on the market at the moment. There's obviously some correction from the pricing that we saw in 2016, 2017. But I think the longer term outlook for the market remains strong. And I think there's a number of hurdles that the industry has to overcome to meet that demand.
All right. And in 2019, what have been the main trends you've seen in the lithium space? And were you expecting those? Has anything changed from what you were expecting at the end of last year?
So I think the big trend for the start of this year has been the correction in hydroxide pricing. Seeing some of that price come towards where carbonate is, and there's sort of stabilized since the start of the year. And I think that, on the demand side, again, we were expecting the continuing announcement of new mega factories in the pipeline. And I think that's just an ongoing trend that you're going to see as more and more vehicle companies target more electrified fleets. So that's certainly something we were watching out for and continue to watch out for with our mega factory tracker.
All right, and definitely prices has been a big trend and a big talking point this year. What are you seeing happening with prices going forward? What's your forecast going forward?
I think you've still got a bit more of a correction to come in hydroxide. I think that's going to narrow on carbonate in the second half of the year. I think a big question mark comes down to where spodumene settles. We're starting to see that price decrease slow. And I think, longer term, there's still the question marks about when the market does tighten. Some of the questions about cathode chemistry are going to be quite crucial when you look at the balance for carbonate and hydroxide. So I think, where spodumene prices are, and we expect them to stabilize. There's not too much more to come out of the lithium carbonate price. As I say, I think there's a bit more to come out of hydroxide, and we're going to see that narrow on where carbonate is at the moment.
All right, and one of the big news this week has been the LME joining forces to keep on developing this lithium futures contract. Do you think a contract will help the industry? And what do you see as the main challenges going forward to adopt this type of contract?
Yes, I think, as we've been quite vocal on since the start of this process, at Benchmark, we think the lithium industry has an evolution to go through before the use of the introduction of a financial derivative can be useful to the market. We're still operating in an industry at the moment where there's significant long-term contracts, there's no formal spot market for lithium at the moment, and there's no accepted industry price, and that's something we're continuing to work on at Benchmark to provide accurate and independent pricing information. So that's, the first step before you can even look towards the introduction of derivatives into the market, I think. That's been our opinion since the start of this process, and that's certainly our opinion going forward. I think what's critical for the market at the moment, and what we're seeing an increasing amount of willingness to do, is to build in third-party references into contracts to allow some more flexibility in pricing. And to do that, you need a respected price provider, and that's something we've worked very hard on since we launched our lithium price assessment service 3 years ago. Become the lithium industry's reference price, and we're continuing to see a lot of demand in terms of people in the industry, leading companies in the industry, into how they can use those prices to benefit their negotiations.
So do you think a lithium contract is enough to bring transparency into the sector? And what other steps should the industry take to bring transparency to prices?
I think the best at the moment, really, you can provide transparency through independent price collection. Obviously, if you have any type of contract in the industry, a financial derivative, it has the potential to provide some transparency, but only if there's liquidity on the contract. So that's crucial, and as I mentioned, really, you need some of these foundations for the industry, and you need an evolution in the industry before the necessary foundations are in place to really allow for liquidity on any type of contract. So I think that's always been our view. The lithium market is still relatively immature compared to some more established commodities, and again, the use of an independent price is sort of the next step in the formulation of a real spot market. So that's what we've been working on.
Right, and just going back to the lithium hydroxide, lithium carbonate debate, last year it seemed everything was about lithium hydroxide, demand is coming for lithium hydroxide. What are your views? I know that you have a more balanced view. Can you just share your thoughts with our audience?
Yeah, so we've, I suppose our balanced view has really been centered around the focus of our research along the supply chain. So we're not just, listening to some of the speculation about how quickly certain technologies are going to happen. We're speaking to each step in the supply chain to really make our own assessment. And it was very much our thinking, I know when we spoke last year, was that the shift towards high nickel chemistries was going to take longer than people were anticipating at that point. And obviously that's what's really going to drive the shift towards hydroxide. So we're certainly seeing that play out in the market this year. You're seeing that some of the momentum towards high nickel come out of the industry in the first half of the year. And I think that's something that, is going to take time. We've said for a long time that before you have the 811s and the NCAs take up a real dominant position in the market, there's still a number of challenges, technical challenges, also economic challenges as well. In terms of bringing the cost down. So I think we're going to see for the second half of this year, we are going to see definitely growth in both carbonate and hydroxide. I just think the real major demand growth for the hydroxide-based chemistries is going to happen post sort of 2022, 2023. But in that time frame, you're still going to see very healthy growth for both chemicals.
Right, and I guess another big topic this year has been the security of raw materials and the developing of supply chains. What are you seeing in that front? And can countries or regions outside of Asia really catch up with Asia?
Yeah, I think there's a long way to go for, obviously Asia is very dominant in the lithium market today. The development of resources and some of that diversity of supply I think has been slowed a little bit with the lack of investment going into the sector, and that's something we've talked about for a long time, that the industry is at a point now that to meet the demand growth of 2022, 2023, significant amounts of capital need to start going into the market in the next 6 to 18 months, really. So I think that's a real challenge for the rest of the world. Obviously, you do see a push with where new electric vehicles are going to be present in markets outside of Asia, and there's the questions about how is the most effective way to manage your supply chain when you're positioned outside of with downstream capacity outside of China. So I think it's going to be a continuing issue over the next decade for the market. But really, the way we see things at the moment, you look at some of the new projects that are being developed, and the money just isn't going in at the speed it needs to at the moment to allow producers outside of Asia to really challenge the dominance of particularly the Chinese producers at the moment.
All right, and in terms of developing battery manufacturing capacities, I wanted to ask you specifically, let's say Australia, is that a strategy that is worth pursuing, or the country is worth pursuing for the country?
I think for the country itself, and I think you see a number of countries around the world looking at this now, seeing the importance of energy storage and the emergence of this new potentially massive industry and being able to contain some of that supply chain within the country. Obviously, Australia has a very big mining community, has done a lot of the expansions in lithium have happened there, and some of the other key raw materials are produced in the region. So to develop some of that downstream capacity and keep some of that value domestically is key, but also, to support the, whether it's electrification of the fleet or whether it's stationary storage applications and taking some grid scale type applications. I think that's something good that many countries around the world, you've seen it in a lot of the work we've been doing in the US this year in particular. You're seeing European governments try and take some more responsibility and more control over those supply chains as well, and put some measures in to do that. So I think Australia obviously has strong foundations on a raw material perspective, and to develop some of that industry makes sense for the domestic market.
All right, my last question for you today. What factors should investors watch for the rest of 2019 that could impact the sector?
I think a real interesting one that I certainly been watching for this year, and I mentioned a bit earlier, was really the growth that you're seeing in some of the cathode technologies that weren't being talked about so much at the start of last year. So in particular, LFP, where a lot of the Chinese producers have existing infrastructure, lowest cost production, of course, and some of the reduction of subsidies is promoting lower cost cathode production as well. So, you know, in the short term, I think it's an interesting trend in the market that you've started to see a bit more growth than people were expecting in that part of the market, and also for the lower nickel cathode chemistries as well. So I think you really have to look at how that affects the supply-demand balance, because really when you look at the new capacities being introduced in the market in the second half of the year, the vast majority are targeting hydroxide. So what does that mean for, you know, the carbonate market? Does that tighten up a little bit? And, you know, are we going to have a bit more hydroxide into the supply chain than is actually needed at this point? So I think for the short term and for the remainder of this year, those are a couple of things I'm watching out for.
All right. Thank you so much for joining us today.
Thanks for your time.
Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today was Andrew Miller, Head of Price Assessments at Benchmark Mineral Intelligence.